So in this next section, what I want us to really explore are some of the ways that funding has changed and transformed. The speakers who will be coming on stage in just a couple of seconds will be the folks who are in this area and really focused on it. They're going to be detailing and looking at and exploring what these things really mean and how they work together. The people who have been part of this event and the folks who have been making it happen, I want to give a big shout out to all of them, because without your help, none of this could have come together quite the way it has. And to make a virtual event happen like this is no easy feat. I want to welcome to the stage Bill Eliassen, who is one of my favorite mentors. He's so involved and so engaged with the students here at BMCC. He is a champion in that space. He's going to be one of the people who's talking about the funding side of what we're doing and how those markets have shifted and changed. I'm also going to invite a couple of other people who were folks that we selected because we realized we needed an international perspective on what was going on too. And so we wanted to pull that into this discussion. The themes for today are sustainability, equity, and paying it forward. And we really can't think about paying it forward unless we have a good understanding of the finance side and what it looks like. As I invite the guest, it's going to be say, do you want to broadcast? Please just say yes to that. That's the easiest way to do it. The Q&A section on the right-hand side next to the chat and the participants tab are where you can put your questions that you've got. Hi, Bill. Thanks for joining me today. I appreciate you making it to the virtual version of all the other cool mentoring that you've done. Yep. And this chance to talk about finance and funding. It is a very big area for us, as we have focused in on it for some time and had some, I think everyone talks about funding and financing and those pieces as a tough challenge right now. And I want to hear, hopefully, if there's some bright spots in other areas that we might be able to do things differently. Perhaps you can discuss that during this time too. But I'll leave it up to you guys to have your space and your place. I just invited Paul into the discussion too. And I'll hand it over to you. Thanks so much for being part of the event today.
Thanks, hello, everyone. Thanks a lot.
Okay.
Cool.
So, Paul, do you want to, should we do just a round robin kind of introduction here?
Yeah, sure. I'll give a quick intro. Yeah, so my name is Paul Monahan. I'm an associate at SOSV. We're a global venture capital firm. We run accelerator programs around the world in 4 different continents, in hardware, life sciences, and the 2 based in New York are focused in food innovation and distributed technology. So, blockchain, the halvening, which happened last night. And so my role is really to work with, startups as well as invest in them, but mentor them through, a 14-week program here in New York, and then, maintain a relationship and continue supporting those companies post-program.
Sounds good. Oh, it looks like Salika dropped off.
Yeah.
Hopefully she'll be invited back. Well, I'll take that opportunity to do my intro. Bill Eliassen, I have a couple of different roles, but as it pertains to startups, I'm director of regenerative business at Mandala. And on that side, we work with a lot of large companies who have internal incubators. So Nike, Procter & Gamble, those types of companies who have like little skunk works innovation groups, and we help them either set up that program or do strategy work inside that program to help cultivate startups that would be sort of like dangerous ideas to their existing businesses. So it's a bit of a separate entity for them. And then all the way on the other side, I'm a mentor with Entrepreneur Roundtable here in New York, and help their program, help their startups get through their program, prepare for their demo day, work on their pitch, work on their strategy, etc. Personally, I've gone through the phases of a startup. So I've been through raising money, growing a company, and then selling it. We sold a consumer-based startup to 1-800-Flowers. So I've kind of seen and lived it from the founder side as well. And yeah, that kind of gives the context for my experience in this space. It looks like Salika is having some challenges getting back on. So Paul, should we just, in the interest of time, should we just keep going?
Yeah.
From your side, what are you seeing as how the funding market is kind of responding to the chaos that we have been thrown into a little bit?
Yeah, chaos is certainly appropriate. I think, I think when COVID became, a larger issue in the public sphere and, end of February, a lot of investors sort of were, I would say, panicking to some extent, mainly about, their existing portfolio. So I think there were a couple of different phases that have happened to this point. The first being kind of, closing down the hatches and focusing on those folks that, they already had a stake in, that they were concerned about. And so I think a lot of new deal flow definitely stopped. Investing in early stage startups, one of the things we focus on is making sure that they continue to get funding if that's part of their sort of journey, right? If they've decided to raise money, once you kind of go down that rabbit hole, you kind of keep going down that rabbit hole. And so I think the way that investors have sort of acted, and they've acted with sort of a herd mentality, a group mentality, prior to this anyway. And it was, if one idea was interesting, then, the next 9 investors would kind of line up behind it. And,
I would say some VCs built their business on looking at other leading indicator VCs and saying, we'll do what they're doing.
Right. Exactly. And that's, I think, how you get, kind of a densely packed market, in certain areas. But I think that same kind of herd mentality copied over. One guy started sitting on his hands, and then I think it sort of snowballed a little bit. And I think the last couple of months funds are starting to open up a little bit more. But what's interesting is that there's, something like $200 billion of, dry powder in the venture space right now. And that money, does need to be spent. There are certainly funds that were raising, or firms that were raising new funds, and, that's slowed. But that, $200 billion does need to be deployed. And what I think is, what I've seen so far, in the market is that investors are starting to shift their, methodology for assessing companies. And
this is the key issue, I think.
I think so. I love what some of the panelists said before about, how, adaptability is so important right now. Yeah. And I think a lot of folks have talked about that. And I think it's hard to put into practice, as an entrepreneur. You need to make a deeper cut sometimes than you're comfortable making, whether it's with, employees or operations. And what I think investors are going to start to do, and I think they're already starting to do this, is before where it was, if you're not 100% year over year, I'm not going to pay attention to you, which is not a fair metric just to view it through that. But now,
and I would say specifically on that 100% was focused not on revenue growth, but on user growth. It was the Blitzscaling model of, I don't care if you make money. What I care is, are you capturing the market? Right. And so I think we've got this interesting confluence of events where pre-COVID, you already started to see a rupture with WeWork, IPO kind of falling apart, with blanking on the other big one, well, Uber coming to market, and then it facing some challenges with, is it really worth $70 billion? Right. And the market, I could feel the conversations in the market start to shift to, it was right when the book came out, Blitzscaling, was when the market started to shift and go, well, maybe that isn't a sustainable model. And then we got hit with COVID.
Right.
And I think that's caused people on the funding side to say, hey, we've got to get back to fundamentals. Like, what actually does a good company look like? And at some point, it has to involve a conversation of, can you make money over the longer term? Can you sustain a business? And so if I could translate that into sort of like the students who are listening, I think if I was in your seat, I'd be thinking about, where do I think the need is, where I can show a sustainable business, where I can show revenue growth. Because when you go to have that funding conversation, I think more and more VCs are going to say, it's great that you're growing users, but how are you going to show me that you can sustain this with actual revenue and profit?
Absolutely.
Sulika, did I get your name right?
Hi, this is Sulekha Chandra. Hi, Mr.
Sulekha
Paul.
Chandra.
Hi, Mr. Bill.
Hi there.
How are you both?
Welcome. We had a little trouble getting you back on.
Yeah, we were supposed to have one more person here and he's not available, and that's okay.
That's okay.
But I think I can contribute my views on this topic as far as funding is concerned.
Mm-hmm.
And I think the economic stimulus is concerned.
Mm-hmm.
As we watch that US and many other economies have created packages, economic stimulus packages, which have helped many entrepreneurs and many business people, even salaried people, to come up and face this pandemic with a bare minimum, sum that is there with them. One more thing, I think investors are right now definitely disappointed with certain investments that they have made, particularly when it comes to product investment, because product supply chain is right now stranded. But now they're seeking more of a creativity in people. They're investing where people are creative. For example, I recently came across one investment that has been done by Accenture. They have created a model called as People Plus Work Connect. People Plus Work Connect, where employer to employer, this platform is free for employer to employer, but the only condition is that the employer must have at least 100 positions open for, with them, so that they can participate on the platform. And look at the beauty of the platform. It eliminates all the costs. It eliminates the multiple frictional points that could come up. And it's kind of a big collaboration that has taken place within the companies themselves, which otherwise earlier, as we say, some people like to play Monopoly,
Yeah.
But this is the time where social responsibility has taken over every kind of poly, and it has come out very well that people are working in collaborative environments than in competitive environments.
Yeah.
No one is trying to win over or snatch somebody's competition or attract somebody's competition. Nobody's trying to do that, but they're trying to create platforms. Right now, I see the only sustainable thing right now is technology, yes, which is making us feel connected. And developers all across the world are creating new platforms, coming up with new ideas, so that people can, create earning means for other people.
Yeah, it's an interesting idea that you bring up around what will be sustainable over the long term. Before you joined, Paul and I were talking about how the VC mind has shifted in terms of what it's looking at for sustainable business over the long term. And, I think there's that old adage, right? You don't skate to where the puck is, but where the puck is going. And any business right now, I talk to my clients and say, you can't be designing for COVID. You have to be designing for what you're going to look like when you come out of COVID. So Paul, I'd love to hear your perspective and how you're working with these, with your portfolio companies, or maybe more pertinent for the students, for companies that are not yet in your portfolio, but that you might be giving money to.
Yeah, absolutely. I think that's a great point, Sulika. There is, like we were talking about before, Bill, the lens really does change in terms of both how you look at startups, but also how you advise startups. And I think going off of what you're saying, it's difficult because I think when you mentor an entrepreneur or when you give advice, they want something, solid and tangible, right? I can go and do this, right? I have a goal that I can go and hit. And this obviously is a wrench, in the works with COVID. And I think it makes the future unpredictable. Next month is unpredictable, as is 6 months from now. And what's interesting is when it comes to revenues and different revenue options, right? If you were a food product selling in retail, right? And we had a company that was doing 90% of their product in retail and 10% in e-commerce. And over the course of 2 weeks, it literally became 90% e-commerce and 10% in retail. And they were able to really, throw themselves into it and not get caught up in, these were our day-to-day operations before this. And that's great that you had a structured system, but that needs to change, and that's where we talk about adaptability, being able to survive. And so, I think the way that we're looking at companies prior to joining an accelerator now is, and I think we do this anyway, can an entrepreneur roll with the punches? And, diving into what, are they flexible, in terms of their business model? Are they counting too much on, if they were an e-commerce company in the first month of COVID, they were doing great. Now, if they take that revenue and project it out over 48 months, then you say, well, that's, it probably won't repeat 8 to 12 months from now. And so I think the main piece of, actual advice that I would give is plan as much as you can in terms of, I have options kind of A, B, and C. And I would say, track that in real time over the next 3 to 6 months and have sort of a foundation where you can say, okay, I need to maybe shift my focus more toward plan B. Like plan A doesn't look as realistic now, and kind of make that, real time decision.
You do bring up a very interesting point that I've dealt with a couple of startups that are just coming out of the ERA program and they just presented last week to 600 investors. Actually, no, sorry, they're presenting tomorrow. Last week was the practice. They're presenting tomorrow. And one of the themes was this idea of, can you show diversification of your revenue mix, right? And so that, I think, is a thing that people are present with now, is particularly in the food industry, if you were set up to be 90% revenue from restaurants, your business just went away.
Yeah.
And that'll be, restaurants will come back and that business will have another life again. But it does bring the question, is there a strategy where you can start to think about diversifying your revenue so you're not 90-10, but you're 70-30? And I think that's a conversation I've heard over and over again with some of the startups that I've mentored, is they came into it thinking, oh, I'm going to have this business, we're going to focus on restaurants. And now they're questioning whether they can also have a mix with some other revenue stream.
Yeah.
Very good point, Bill. As far as the diversification of revenue is concerned, even I feel that right now in India, we are watching Swiggy, we're watching Domino's, we're watching some of the restaurants, all labeled restaurants. They are devising, they're doing email marketing, and they are trying to build trust within people that we are giving COVID-free deliveries. We are making sure that we are giving COVID-free deliveries. So people have now started, thinking on those lines. That because, yes, you're very much right. Retail has been hit. Restaurant business has been hit. All the things that has to do with some product, some tangible product has been hit. But as far as this is the time, I think, when entrepreneurs, employers, they have to create trust. This is the time to create trust through any means. And we are using technology in all manners possible. And people are now going ahead again with Swiggy orders and again with Domino's orders. So I feel in a projection of 2 or 3 months, definitely the economy is going to come a bit online. Maybe, yes, as you said, not 90-10, but maybe 70-30. But I'm very positive that people are going to come on. And one more example that I would like to cite here is of Make My Trip. Make My Trip.
Not familiar with it, no.
One of the world's largest online this tours and travel packages they make for people.
Okay.
And they are doing email marketing, and I watch these emails and I start getting this feeling that, okay, what are businesses doing right now? And they are sending trust emails for people and telling them, make your buckets, pick your wish list for these destinations, and we are offering you discounted prices right now, so that 1 year later till this time you can also use these discounted vouchers.
I see. Yeah, so they're trying to pull forward revenue.
Happening. People are getting creative to gain the trust of people, and go ahead. And now everybody has started understanding that it's very important to circulate money now, circulate more skills, circulate more money. I hope you agree with that, yeah?
It brings up, I don't know if this is kind of a tangential, sorry, you kicked off another thought in my brain around funding. And I'm thinking about the students here who might be listening and have an idea and say, where do I go to get money? And it makes me think that another conversation that I've had with startups is about the cost of money. And that means, who are you getting it from? And are they really a partner? Are they in this with you? Do they understand your vision? And will they be with you for the long term? And how do you diversify your funding mix? And so there may be opportunities now to get government funding from some programs that are kickstarting. Paul, you said you have a food incubator.
Yeah.
I've been we started a charity initiative called Farms to Food, which thrust us into kind of like the food system. And there's a ton of money now being poured into how do we look at creating a more resilient, diversified distribution system for food, because there's a lot of breakdowns. So if I'm a student, I would be thinking of where are the fault lines that have been exposed by COVID, and what ideas could I come up with as a startup that would be interesting to government funding, that would be interesting to VC funding, and that you could start to pursue and get a diversified mix of funding to get your idea off the ground. Paul, what are your thoughts on that?
Yeah, absolutely. In terms, I think the food space specifically, like, the supply chain infrastructure, as I think like a lot of industries, is always critical. And I think especially during, a crisis, right?
As we've just learned.
Yeah.
I mean, we've seen all the cracks and the fissures happen now.
Yeah, and we're paying the price, right? Like the stuff that can get swept under the carpet, I think a lot of the time, or the inefficiencies really, are not as much of an issue as they are now. And we have, the companies we invest in are, span, CPG products, agricultural tech, supply chain tech, and food tech generally. And it's been really interesting to see, how those different sub-verticals have kind of responded differently. And, those in supply chain or distribution tech have for, to a large degree been doing well. They've been called upon during this time of crisis to kind of solve some of these issues, facilitate e-commerce deliveries, create more, last mile delivery possibilities so that, there are less hands touching the product. I think it's tough right now to be a consumer good, unless you have you have existing e-commerce presence. One of the things that we were telling our companies is, if you were an OG e-commerce company, like, make sure that people know, because everybody's, now pushing for, now that we're an e-commerce brand, now we're a delivery brand. And I think that's the next task for folks. Okay, now that there's twice as many people in my sub-vertical, how am I differentiating myself? It was important before, but it's critical now. Like, there's more people, there's, depending on where you are, there's more money being spent on e-commerce, but, less slices of pie overall.
Yeah.
Well said, Paul. Shall I add some views over here?
Please do.
Bill, you want to say something? Mr. Paul, I recently, I'm commensurate with what you said. I recently came across a conference talk that was conducted by United Nations. And they came up with this idea of creating a program called as COVID Fit 19.
Mm.
I hope you've heard about it, COVID Fit 19. And the main features of this program are, number one is looking at, what do we say that, risk awareness, risk awareness.
Yeah.
And creating safe working environment, that what we would call as safe COVID working environment, And they've also said that supply chain management has to be made robust so that we can ensure food security all across the world. And third, they talked about the World Business Council. There is the World Business Council. Their business expertise is being, leveraged for making this product, for making this program, so that it can be floated to entrepreneurs, to businesses which are suffering, so that they can benefit from this collective experience that has been contributed from businesses all over the world.
Yeah.
So that is the point I wanted to make over here. Yeah.
I wonder, that brings up an idea. I'm not sure exactly how much time we have. I think just a couple of more minutes.
Maybe.
But Sulika, I wonder if that will translate into more corporations looking to fund startup ventures that help them build more resilient and robust ecosystems as a way to do it quickly. Because I think there's going to be a number of organizations that say, wow, we just got hit by being exposed in our supply chain and we weren't necessarily ready for it because they were designing for cost efficiency and speed. And now the conversations around, well, maybe we should be investing more, which is going to be a little bit more costly in the short term, but maybe we should be investing more in, as you said, resilience, robustness, and changing our supply chain mix. And I think that could probably hit a number of industries, consumer goods, technology, healthcare, infrastructure. So it may be a very good opportunity on the horizon for these corporate investment funds being on the lookout for new investments. Paul, have you seen any early indication of that at all?
Yeah, I think actually what you were saying before about strategic investors, or may have been on the previous panel about, investors kind of putting themselves out in a way, or, strategic investors putting themselves out in that they're going to find somebody who can build a better product and better tech than they can. And I think a lot of it has to do with the amount of money they're going to deploy, which is, in short supply at the moment for a lot of companies, but also the time it takes to bring that to market. And I think having more isolated, product-specific teams that, that's their bread and butter, that's a better avenue and has been a better avenue. And I think some of the larger companies are starting to see that, especially in the food space.
So I see Professor Snipes has joined us, which I think means our time has come to an end.
Yeah, exactly. I walked on the edge of the stage and just sort of stood there hovering like we do in
gave us the hey
situations, right?
Wrap it up.
Thank you, Mr. Snipes.
Oh, you're muted.
Yeah.
Professor, you're muted.
Thanks so much, guys. So I was hovering on the side over here like they do during those times where you're on stage, right? And the moderator is kind of standing there, or the person who's emceeing is kind of standing on the side. So I was doing that for this session just now. You guys, thank you so much for the insights about financing and funding, not only here in the US and in general, but also around the world. Sulika, thank you for stepping up. Bill, thank you for moderating. And Paul, thanks so much for being part of the panel today. We appreciate your time. If you tap the little present button down at the bottom of your navigation screen, at the very bottom, you'll see that it'll drop you off stage, and that should allow you to go away. The other option would be, there could be a present button next to your name. Either way, I'm going to make the transition right now to having us as the mentors start to step up and go to their particular tables. If you have a question about what table you're at or where you should be, please message Tabitha, Jamie, Arthur, or myself, because we are all making sure everyone's in their right places. I did send a couple of emails out over the last day or so, and again, another one this morning that reminded you of the table assignment link. It's a little tiny link there. One of the words in the email was a link to the spreadsheet. So you can click on that and you can see which table you're supposed to be at. This is going to be a whole new way of thinking about mentoring for us here at BMCC. I know a lot of people have done virtual mentoring now with the new place and space that we are, everything going virtual. So some of you guys are familiar with it and enjoy that part. Those of you guys who aren't, just relax, and the students have been practicing some in the space, so they may be able to help you with some of the things that you need to work on. The table assignments that I will make sure that you guys have, though, I want to walk you through a couple of things that are going to happen next. The first is when I stop being on stage, this big screen is going to go away. And then you're going to see a bunch of tables kind of in a virtual space. And you'll see there are two different floors. If you look on the left-hand side, there's a first floor and a second floor. So make note of that in the list, which floor you're on, not just which table. There are actually a few more presenters on the second floor than the first floor. Some of you guys may be assigned as floaters, and you'll see that in the email as well, and in the list. That just means that you have the flexibility of being able to move around. I recommend that you stick to the cycles that we have. The other thing I'll tell you about is at the very top of the screen up here, you're going to see a bar. And that bar will be green when you first start. And that'll be when the entrepreneurs are going to be doing their basic introductory pitch. And then the rest of the time is Q&A and feedback for you as the mentors. So everyone can go to their tables and their assigned spaces, and you should be able to find your entrepreneur and your mentor. I'll give us plenty of time in this space and place to get situated. And then we'll have one more panel, which will run perhaps just a little bit shorter than it would have, because I want to make sure everyone gets comfortable with this mentoring process. So as you have questions, like I said, please look for Tabitha, look for Jamie, or look for Arthur, and make sure that any of those people can also answer your question and tell you which table you're supposed to be at. All right. Thanks again, everybody, and have fun mentoring during this time. All right. Talk to you soon.